Hi everyone, it's Tuesday evening. I'm here with Jennifer. Hi Jennifer.
Hi Rob. Hi everyone.
We're here for a webinar on the topic of how to find great trades every day, organized by me, Rob Booker, and Jennifer Thornburg. Nice to be with you on this beautiful Tuesday evening, forex.net. And tonight we'll talk about short-term trading with Jennifer's Hopper. I'm really excited about this, Jennifer. It's a big deal. We are recording every minute of this webinar. And guess, Jennifer, guess what we're going to do with this webinar when it's all over?
What are we going to do?
I haven't figured it out yet.
I
was hoping you were going to tell me.
I'm counting on you to know what to do.
We're going to record this, and we're going to send it to everyone. So even Jennifer forgot that we were recording it, even after I said it. It's easy to forget that. But tonight, both of us would like you to know that we're recording the webinar. We have a lot of special information to share with you, and we look forward to presenting a really fun short-term trading strategy. I see a lot of friends here. Adrian's here. Dan P. is here. And so many others. I see April is here. Jennifer, lots of our friends are here. Anybody in particular you want to say hello to?
Oh, I'm just so happy that our friends are here. Especially happy to see Dan. He's one of my favorite trading buddies on Twitter. So thanks for being here, Dan.
That's great. Nice to see Patricia here, and Osman, and Wade, and Robert. We're interested in your questions. Hi, Jim. Hi, Roland. Hi, April. We're looking forward to hearing from you tonight. There's a questions panel on your webinar software. We invite you to use it if you have a question during the presentation. Tonight we're going to try to get through this webinar in about 35 to 40 minutes at the most, so we don't interrupt your life. We're trying to teach you a strategy that doesn't interrupt your life and that fits in really well with your schedule. So why would we start it off with a 14 million hour webinar? We wouldn't do that.
Uh-oh, you didn't tell me I only had 40 minutes. I'm gonna have to really, you have to catch me if I start rambling about anything so I can keep it concise.
I don't think there's one person here tonight, Jennifer, that will care if you ramble a little bit. I don't think it's going to matter. I think rambling is encouraged. I'll share a slide with everyone. Yeah, Jennifer?
I forget sometimes when you tell me things like we're going to record it and we're going to email it out, and I ask you something that you've already emailed me 20 times. Because I'm really focused on what I get excited about, which is trading. And in particular, I've been doing a lot of preparation tonight to get ready to introduce to you the Hopper. So you have to forgive me if I get rambling or if I get too excited or if I forget things that you already told me. But hopefully tonight I can share some of my enthusiasm and some of my excitement with you about things that I've learned about trading. And in particular, I'm gonna review or introduce, depending on if you've heard it before or not, a strategy that I call the Hopper. And I introduced this for the first time at an expo in Las Vegas about a month ago. So maybe you were there, and maybe you just heard us talking about it on Twitter. So, so here we are talking about it once again, and I hope that you enjoy what we have to show you.
The entire point of what we're doing together is we're trying to help you find more trades. We hear time and time again two things. One, I'm frustrated with the inconsistency in my trading, Rob and Jennifer. I want to trade more consistently. I want to find more trades when I have time to trade. And that's not, neither of those are unrealistic or terrible things to say. Actually, they're really quite good things to say. We want you to find more trades, and we want you to become more consistent. And everything that we're about to share with you, including tonight's presentation and an upcoming series of 30 live trading sessions that we'll do online where we trade live, the Hopper, and other methodologies. Everything is designed to help you with those two critical issues in your trading life. Whether you're a beginner or advanced, everyone that I know anyway is interested in becoming more consistent and in finding more trades. We all have experienced a time when you sit down at the computer, when you're finally able to do it, and you're there during a session of the market and it's not producing anything using the methodology that you use that might be a little bit longer term in nature. Tonight, Jennifer's going to share the Hopper, and I could not possibly, Jennifer, be more excited about this. So Without further introduction, Short-Term Trading with Jennifer's Hopper, brought to you by 15minuteforex.net. If you go to 15minuteforex.net/apply, we will put you in the queue to be invited to trade together with us in a series of upcoming live trading sessions. Tonight our agenda is Jennifer will talk about the Hopper. I'll talk about my trading of the Hopper. We'll take your Hopper questions. We might have some time for open Q&A and live market analysis, and if we don't, then we'll come back and we'll do it again another time. But we for sure will be able to teach you this system tonight. We hope you stay in touch with us. Jennifer's available on Twitter 36 hours a day at Gentho3.
Someday.
I'm available on Twitter between the hours of 9 a.m. and 9:01 a.m. every morning.
Yeah, more like you're there 36 hours a day. And if you can't get a hold of me on Twitter, you should look for my friend Dan, because if there's a trade setting up, he's probably already in it. So.
That's great. And remember, we are doing an upcoming series of webinars where we trade this and 4 other methodologies live during the European, Asian, and New York or North American sessions. It's a huge series of live trading webinars, and you can get more information and apply at 15minuteforex.net/apply. Jennifer, take it away.
Okay. Well, this is the Hopper. The Hopper is a trading system slash methodology slash essentially it's just been a platform for finding and building trading strategies that are going to work for you. And we are sort of introducing this as a short-term strategy, although it doesn't necessarily have to be short-term. Short-term means different things to different people, and sometimes what it means to me is the short-term charts, the 1 and 5 minute charts, or even shorter. Sometimes what it means is quick profits, like you would call a scalper, that just gets in and takes a small amount off very quickly and gets out before they are exposed to very much risk. These are things that you would consider short-term. And the Hopper really isn't short-term in nature. The Hopper is essentially a way of using the MACD as an indicator. And so that's how we're going to do it. That's what we're going to talk about tonight. So everybody wants to get a great trade, and you want to know how to get a great trade. You have to watch for momentum, and you have to make sure you're pointing in the right direction. Rob, you can flip to the next screen.
I was hoping you would let me flip to the next screen.
I think it's a picture of a surfer. I like this picture because I live in Southern California, and while I don't surf, okay, I have tried, but while I don't actually surf myself, I like to watch them, and it is especially fun to watch people that are learning, but it's also fun to watch people that are very skillful at it. It seems so simple. You know, the water starts to make a swell, you have an indication that some momentum is coming, and then all of the surfers jump on their boards and start. And it's kind of funny, he misses his ride. So it's just like that with trading. It's a matter of finding the right direction to point yourself, to point your surfboard, to point your trade, buy or sell. And it's a matter of timing and finding some momentum so that you can get a bit of a ride in the market. So you can go to the next slide. And I put this slide in. And if you guys were in Las Vegas, I apologize if some of these are repeats, but the whole thing is not going to be a repeat because I've revamped a lot of what I'm going to introduce to you this evening. But I put this slide in because I like to keep in mind that we're not just looking for gargantuan trades in order to be successful, profitable, wealthy traders. You can build an extraordinary amount of wealth in trading only making 1, 5, 10 pips at a time. It doesn't have to be, you know, the giant wave that you think of in Hawaii that the competitive surfers are taking. So even in surfing and even in trading, if you can just be ready with a little bit of momentum and the right direction, you're going to get a significant and a meaningful ride. Go to the next slide. So indicators indicate things to us, and we want to know where we can get reliable information for trading. And tonight it's all about the MACD. In fact, for the next 3 months, I'm going to be a lot about the MACD. It might be taking over as my favorite indicator, which is neck and neck up there with the RSI, but we'll talk a little bit about that later on too. So the MACD is relevant to this conversation because it gives us an indication when there's a change in market direction or a change in momentum, two things that are pretty important to traders. Go ahead.
I knew you were going to say go ahead.
Okay. So a lot of you hopefully are probably going to be familiar with the MACD, and if you're not familiar with it, I'm just going to give you a little bit of an anatomy lesson. But the MACD shows momentum. That's one thing that it shows. And if you start from the 0 line and you work your way down, you can see that momentum is building, and as momentum gets stronger and stronger and stronger, there is more momentum turning up as market is moving downwards. The MACD histogram here is moving downwards, and I want you to look at these bars and just sort of feel momentum. Go to the next slide.
I was feeling the momentum.
Feel that momentum. If you're watching a chart and you're in a sell trade, this is the kind of thing that you want to see. You want to see those bars falling down quickly as your trading account is stacking up some pips. That's really a pleasant feeling. Everyone here has probably experienced that feeling, and there's nothing better. We keep coming back for more. So downward momentum in price is a really good thing when you want to place a sell trade. So when the MACD has no momentum going on, or it can't feel it, it can't calculate it, there is no momentum in its calculation, it goes sideways. It can't really get going up or down, and it just makes these little dots that go straight across the level of 0. And you can go to the next slide and see price, when there's no momentum, is really no fun to trade. You can go to the next slide. And
who is this guy?
I don't know. That's a ridiculous picture, though. He looks like he's faking it, doesn't it?
No,
well,
he looks like he looks smug.
He
Wipe
looks
that
like
smug look off your face, trader guy.
He got into a trade and there was no momentum, and it made him not a very pleasant trader.
What if this guy is actually here tonight?
I would say thank you for your photo.
If you're here tonight, you should be embarrassed about yourself. You wipe that smug look off your face.
I paid 50 cents for that photo. I think I'm very proud.
Did you really pay 50 cents for that
photo? I really did, yeah.
I'm so impressed. This is the Las Vegas presentation was awesome. Let me just say a word about Las Vegas. Jennifer went to Las Vegas at the expo. Attendance at the expos has been gradually increasing again, which is great. But sometimes well-known speakers get nobody in their session. One very famous individual in particular had 5 people in his session in Las Vegas. And the reason was Jennifer was speaking next door and she had 200 people in the session. And Jennifer was surrounded with people after the presentation about the hopper. I bet one of those guys was this guy in the picture. Anyway, the point is, this presentation, Jennifer, is extraordinary. You already improved it. I didn't even think it could get better. So enough with this guy.
Okay, you can go to the next slide.
What's this upward momentum stuff?
Here is more MACD momentum. Focus your attention on the upward sweep of these histogram bars and just sort of, feel that market movement. And I love to look at the MACD with no price on the screen because I do believe there is a feel to it, just like there is if you're a surfer. I hope this makes a lot of sense to you, but there is a lot of feel in what you do. And people always say, oh, you're such a great trader, you must have that sixth sense. And there is really no sense. It's just experience. It's just paying attention and sort of generating a feel for momentum. That's really all that it is. But this is the MACD histogram demonstrating it's building momentum slowly, getting stronger and stronger and stronger as those histogram bars get taller and taller and taller away from the 0 line. Price looks like thus when we have momentum. Momentum is a great thing when you want to enter into a buy trade. And you're going to find, if you spend some time with me in my short-term trading strategies, and if you've already spent time with me in the combo trade, that it's very similar. I like to get out of the way of risk. I like to be in the way when I have a momentous occasion, and what I'm talking about is momentum. And the MACD is just really my guy for helping me find and feel that timing in the market so that I can get in and get out while it's as relatively safe as it could possibly be. Okay, next slide. So when we have momentum, we have a trade opportunity. And when we have the right direction, we have a positive trade opportunity. And the MACD is an indicator that helps us with momentum and direction. It gives us an indication of both, but more importantly, it gives us an indication and it calculates what's going on historically over time in a currency pair, that it can give us an indication of when things are changing. So if you're in a trade, and let's just say it's a long trade, you bought it and you have some momentum and prices going up and you're a happy trader. And suddenly something happens, there's a change in the market environment, MACD is going to let you know, hey, it's time to pay attention, happy trader, because something has changed and this upward momentum could be fading. And that makes the MACD one of your best trading tools and one of your best friends on your charts. It gives you the kind of information that's going to keep you profitable. So you get the idea of what I'm talking about.
I just thought I'd say that.
I don't remember this slide.
If any of you are wondering why I'm here tonight, I'm recording this webinar. Every last sentence, comma, and period. And we're going to email the whole thing to you after it's done. I'm flying to Chicago tomorrow, so you might not get an email with the recording of this for a couple of days. But Jennifer, it is going to be delicious.
I'll try to remember that the email's going out, so I won't have to keep asking you.
Who's this smug woman? What is it with the smug people?
Well, there's another 50-cent picture. And I like it because she's obviously got the MACD on her charts and she's a happy trader. So she knew when to get out before momentum faded, and a winning position turned into a losing position. So she was happy with her MACD. Okay,
look at that. She had like a Nokia Zero phone and the laptop that was used during Abraham Lincoln's first presidency. Wow, check that out. That's awesome. 50 cents. That's good.
Yeah. Okay, so this is our one-page lesson on the MACD. And I have to tell you that when I was in Las Vegas, I learned a lesson about sharing my information about the MACD with people. Nobody cares. Nobody wants to know it. So I like academics, and I did an in-depth study of the MACD and how it works and what goes into that indicator and what all the math is and how it, how it comes up with its information. And I really did a lot. I got excited about it, and I added some depth to my understanding and to my ability to participate with the MACD. But what I discovered is that nobody really cares about the math or the history or the calculations or what it's doing that you can't see. So if you want to know more about that, you can email me and we'll have a private conversation. But in the meantime, I'm going to stick to the part that you want to know about and that you need to know about. And it's the part that you're going to see on your chart. It's this window here. I'm pointing to it, but you can't see because I don't have the pointer. But Rob, if you could just point to the MACD window, hopefully you recognize this because you've already used it on your chart some. So the MACD line is the blue solid line, and you can put it back up there. I think everybody's got it.
So you see that blue solid line.
Right. The blue solid line is the most important line that we're going to talk about tonight for sure.
And it's the faster line, no matter what color it is on your charts. It's just the faster line. It's the one that gets to wherever it's going faster than the other line.
That is true. That is true. That might be a good way for you to determine on your charts what color and which line is your MACD line. On these charts, and what I'm going to show you tonight, just know that when I talk about the MACD line, and the most important line on this chart is the blue solid line. And if you have any problems or questions or confusion about the MACD line, please don't hesitate to send me an email. I'd be happy to talk to you and bring more clarity to that if you're a beginner. But for those of you who know what the MACD line is, we're going to move on. So this is an anatomy lesson of the window that we're going to see on our charts. And go back up. We're still on the previous slide. So the MACD line, the signal line, is the little dashed red line. And one of the most important lines that you're going to have in your MACD chart is actually not even a line. I drew it in here as a red line across the level of 0. It's really just a level, and you'll see the little 0 off to the far right of your chart. And do you see where I put a little green arrow and I said the 0 line? This is the most important line because the MACD histogram oscillates up and down over this line continuously. When it's going up, it's showing you a demonstration of positive momentum, and when it's making bars longer and longer going down, it's showing a demonstration of negative or downward momentum. So the histogram bars are the black bars. The zero line is across the middle. That's just really important. Get etched in your mind where that zero line is. And the MACD line is the solid blue line. Those are the most important pieces of the MACD. We can go forward now.
Jennifer?
Yeah?
John P. Hay, or John P. would just like to remind us that he is an actual surfer.
Oh, awesome.
You may now proceed.
Okay. If you wouldn't mind sending me a little comment and tell me if it made any sense about the momentum thing and the surfing, that would be great. I would love to hear it.
And so is Shane. Oh no.
Okay.
Now we're going to hear
there were surfers in here. I knew it. I was a surfer in one of my past lives, I'm pretty sure, because I'm really attracted to it, even though I can't do it. So in this chart, I just want you to see how the green arrow in price is going up. The MACD is making taller and taller histogram bars going up. When price is coming down, MACD is making longer and longer lines going down. And when price is going sideways, MACD is going sideways. And it seems really easy, right? Of course, if it were only that simple that when the MACD was going up, we could buy, and when the MACD is going down, we could sell, right? If only it could be that simple, Rob, wouldn't that be great?
I would just be so thrilled if it were that simple. Please tell me it's that simple.
Okay, go to the next chart. In this chart, I want to bring your attention down to the MACD, and notice where I highlighted in yellow the blue line crossing from above the zero level down into the bars going down below the zero level.
So each circle corresponds with a yellow mark on the chart?
Right, so starting with the yellow mark on the chart, that is an entry for a sell trade, the first one there. I don't know if you can point to it with your arrow or not, Rob, but I just want to make sure nobody misses this. Point to the highlighted yellow with the first time the MACD line's going through the zero line.
Yeah, just take me 25 minutes to do it. Sorry.
No problem. That's why I wanted you to handle the slides. Right, so that area there, very important. First step. The MACD line is coming down. It's coming down hard, directly down where it's going to crash into that zero level and enter into the area that goes below the zero. If you entered a sell right there, you would have gotten 5 pips with relatively low drawdown. So the red circle shows the area where if you had placed a sell trade right at that point where the MACD crossed the zero line, you would have gotten a 5-pip trade. This is a 5-minute Eurodollar chart. Where the green line is, the MACD line came up through go down to the MACD, and the MACD, the blue line, goes up through the zero level into the positive area. That triggers a buy, and there was no drawdown whatsoever, and you got 5 pips in less than 5 minutes. So that was pretty slick. So maybe it is that simple. The red circled area there is, well, let's see, there was another green and another red. Everywhere where there's a circle, the MACD line can be seen crossing over the zero level. And when it crosses from below to going up and you buy, you get 5 pips just like that within minutes. And when it crosses to go from above the zero line down into the negative histogram bars, it's a sell trade for 5 really quick, easy pips. Everyone on this chart had, you know, less than 5 pips of drawdown. So you can go to the next chart. You're going to get the idea that we're looking for the MACD line to cross over the zero level, and we're going to look for a trade entry. So in a simplified manner, so that I don't bore anybody with the academics of the MACD, it calculates change in direction and momentum, and it demonstrates that change visually on your chart, which is perfect when you're sitting in front of a short-term trade or anytime you want to sit down to your charts and look for a trade to take. You have a pretty great visual representation for how close we are to being able to find a trade entry. You can go to the next slide. So here's where I'm talking about the MACD, and really the whole design of the hopper is creating a platform from which we can build long-term, short-term, medium-term, time-sensitive, all sorts of different trade methodologies, just with all with the same starting point. So the MACD line indicates a buy for a trade on this chart where I have it highlighted in yellow. It crosses, the blue line crosses from below 0 into the positive histogram bars, and we enter a trade. So if you're a scalper, you could just take 3 pips without even thinking about it within about 30 seconds. If you're a medium-term or a long-term trader, you can have lots of different ways for determining how long you want to stay into the trade. You can go to the next
This
slide.
answers a big question coming through. This is a good time for me to interrupt you, Jennifer.
Sure.
It's never really a good time to interrupt you, but let me go ahead and do that just briefly. Number 1, standard settings on the MACD, 12, 26, and 9. Number 2, some of you have a MACD with only one line on MetaTrader. When I will send out a copy of an indicator for MetaTrader that you must, meaning it's your responsibility, load onto your charts yourself, but it includes 2 lines. Jennifer mentioned a 5-pip profit target. That's a minimum. On the hopper, it's not the maximum. A lot of you recognized very quickly that this move in particular that you're looking at on the screen right now, and the other ones for that matter, had much more potential than just 5 pips. If you are a short-term trader and you want 5, this gives 5 pips over and over and over again, easily. We've both done hundreds and hundreds of back-tested trades that we'll share later on to prove that. But many of these trades go much further than that. So for now, don't become concerned with the risk-to-reward ratio. There is plenty of potential for a much more significant profit target if that's the type of trader that you are. Jennifer, go ahead.
Right. Well, we can go to the next slide, and as we go, there is much more to say about risk reward and about trade size. So we'll definitely get there as we go. So I guess the next few slides are just demonstrations of the MACD giving free information that you can use as a trader. So in the left side of the window here, we have momentum building and price rising. So we're putting the 2 together, the histogram bars, and I don't mean to insult anybody's intelligence. Probably everybody here is like, okay, all right, we got it already, move on. But it's really important that you spend a little bit of time letting all this sink in to your brain so that it sinks into your subconscious, because it is going to affect your trading. On the right side of the train, prices falling with a good amount of speed, a good amount of momentum. As you can also see, the histogram is demonstrating momentum is getting stronger and stronger and stronger. Okay, go to the next chart.
Let me address another great question that's coming up about the MACD being a lagging indicator. It's absolutely true that every indicator is lagging because it's built from price. What the MACD is designed to do, and this might strike some of you as odd, but it will make sense to you in just a moment. The reason we like it for this system is because it's lagging. The MACD won't fall through this horizon line and create a hopper trade unless price has proved that it wants to go in that direction. Price is king, of course, and price is the only indicator that isn't lagging. But if it were as easy as that, we would just be able to call every top and every bottom because price would turn around. Not every turn is actually momentous, as Jennifer says. That's why the lagging nature of the MACD tells us the story, and for a story to be told, you need a beginning and a middle and an end. That's what's spectacular about this, is that it lags enough that we can tell when momentum is increasing in the direction that price turned. So price was the leading indicator, but the MACD was telling us the rest of the story on whether this was momentous enough for us to want to trade.
I have just one more thing to add to that about the MACD and lagging and all that. You know, first and foremost, there is no indicator that can predict the future. So there is not a single indicator that can go ahead of price and tell you what price is going to do. If there were such a tool, the MACD would be about as close as you can get as it shows divergence. And that's something that it's an advanced question, and I'm sure the person that asked that question gets the answer. But I also don't fully agree that it is lagging, because as we're going to see as we go through the next few charts here, and we don't have too many more to go through, but we're going to get to the best ones here in just a moment. What we're going to see is that it does, ahead of price, give us an idea when momentum is waning, even before price starts to wane. So if you want to get out before it potentially turns around, it does give you, before price moves sometimes, it does give you an indication that momentum is fading and that momentum is running out and that the upward movement could be coming to an end. So it's not, I wouldn't necessarily agree with this statement that it's lagging. I actually find that the reason I love it so much is because it's showing me a real-time, not lagging, indication of when there is a change between the indicators that it's collecting information from.
Right.
So,
right. It always lags price, but it doesn't necessarily lag momentum. All right. So let's move on. Yeah,
okay.
We're good.
Okay, you can get me going on that one for a long time. Wait, go back one.
All right.
Go back one. So I'm going to talk about a couple different things here. Sometimes traders just want to be in the trade when going is good, and when momentum slows down, they want to hit the road running. I would be one of those traders. I do it in my longer term trading as well. I don't wait around for the tops. I never, or the bottoms. I never do. I want a safe piece that's relatively in the middle of the momentous move, and that's my particular trading style, whether I'm trading long term or short term. That's one way that you can use the MACD to help you find an exit. So first we were talking about entries, now we're talking about exits. So go to the next one. Some traders don't want to have to think. They just want a signal that tells them what to do. And you know what? I tend to overthink everything, and I would not put myself in this category, but every now and then I am tired of having to think through every single thing and then be responsible for my decisions. And it is nice to have a get in here and a get out here kind of indication from an indicator. MACD actually will do that for you. In this particular chart, there was an entry, enter a sell trade, when at the far left where it's highlighted in red, MACD line dropped down through the zero line going into the negative numbers, enter to sell. And as we get into the hopper, you're going to see one way to exit the hopper is when the MACD line crosses back up through the zero line, and sometimes that can be days. So sometimes that price can be all over the place before that happens, and you end up in a worse place, but a lot of times, such as here, you end up in a better place. But no matter how it ends, it's a definitive signal when to get in and when to get out. So you can go to the next level. So on this chart, we enter a trade when the MACD line crosses to go up through the zero line where it's highlighted in yellow. And when we're in a trade, we have several different ways that we can use the MACD to help us decide when to get out of the trade. So the person that wants to just have their profit target set to 5 pips or 6 pips, and they just want to take it over and over and over again, and you're going to learn about those kind of strategies, and they're sensational, and they're really peaceful as a trade. It would be really easy. You have your entry, and your profit target is set to 5 pips, and the first level there in green, you're out with 5 pips. Or if you're the next kind of trader that wants to wait for some signs that momentum is fading, if you notice where it says first sign there, and the 2 red arrows are pointing to a pink highlighted place in price, and the purple highlighted place over there on the MACD histogram. At this point, you can say, I see those MACD histogram bars are getting shorter now. Like, I'm not going to push my luck. I had 2 bursts of upward momentum demonstrated on the MACD. The first one in yellow, the second one up there in purple. And I see that it's fading now, and I've got 25 pips on the table. I'm just going to take that money and run. And 25 pips off of a 5-minute trade is very darn respectable, in my opinion. But let's just say that you want to hold on and you want to put a time frame on it, and I put 3 hours on this chart. So 3 hours at the top of the chart where the purple highlighter is 3 hours into the trading session. I'm going to talk about that in just a minute, but within the first 3 hours of any trading session, the New York session or the U.S. session that starts in New York City at 8 o'clock in the morning in New York time, or the London session or the Asian session, the first 3 hours of any major trading session is when the most activity happens. So let's just say that you want to end your trade at the end of that trading session. The most activity is happening in the first 3 hours. If we get into a little bit of a trending activity during that market time, so the New York time for me is 5 in the morning until 8 in the morning. If it happens to be trending during that time, I can get in on the trend based on the MACD, and I can just hold it for 3 hours. And then win or lose, no matter where it ends up in 3 hours, I'm going to close it. And this particular trade was 60 pips, which is not uncommon at all for the first 3 hours into a trading session on the euro dollar. Entered from a 5-minute chart. It's not really a short-term trade anymore. So let's see, then someone will wait for, for the MACD signal, and like we saw on the previous chart, and so what that is I'm waiting now, that person wants to wait for the MACD line, the blue line, to come back down through 0. It's not even happened on this chart yet. If you look where the MACD is all the way to the right, the blue line is pointing up, and price is still rising. I mean, this thing could go, who knows how long this trend went before it turned back. So the point is, you could wait for the signal to tell you when to exit your trade, and you could get another 160 pips out of it before it calms down if it is in a trend. So you go to the next slide.
All right.
I hope that opens up a few layers off the onion of what you can do and how you can use it. It's not just a short term, but it is an indicator that gives us so much information. And guess what? It's all free. Isn't that awesome? I wish I had created the MACD. If I created the MACD, I don't think it would be free. I think I would charge people for the MACD, because it's unbelievable how much information it crunches and it puts visually on your charts, and I don't know why more people don't get really excited about it like I do. So here are some quick and dirty rules for trading the hopper on a 5-minute chart or a 1-minute chart. As Rob said, I do use the default settings. Default settings for my charts are 12-26-9. These are settings that you can change, but that's what I use. I never change them. So I trade the 5-minute hopper during the first 3 hours of the trading session. In real life, for me, that's 5 in the morning until 9 in the morning. That is the New York trading session, or the U.S. trading session. In my back testing, I have noticed that the London session is sensational for trading this strategy. For my time zone, it would be between 11 p.m. and midnight, between 11 p.m. and 12 a.m., some of the most reliable 5-minute MACD hopper trades. They're just fantastic. They're so good that I might have to start setting my alarm and getting up in the middle of the night to check those out. So that's the first thing, is to pick your time zone of trading, and to know you can try to trade this any time of the day, but that's when it really is designed to work the best, especially from the 5-minute charts. You take a sell when the MACD line crosses from above 0 to below 0, and you take a buy when the MACD line crosses from below 0 to up above 0. You're pro on that. We've already seen 100 examples of that. Go to the next slide.
No problem. Just covering all these questions. If we're not getting to your question on the webinar, I'll probably type it out. If you don't get an answer by typing out, then stay in touch with us. We'll get to you.
So then the next question is when to exit your 5-minute hopper trade, and we've already demonstrated a few of those, and I'll just review them. You can enter your trade with a default profit target setting, which I do all the time. My favorite number is for the short-term trades is 6, and I have done a great deal of live trading and backtesting trading of this strategy and other short-term strategies, always with a profit target of 6. And the reason is because it's super reliable and it hardly ever loses. So, and we'll get into a discussion about risk-reward in just a little while. But I certainly have some trades to back up the numbers that we've chosen here, and we'll get to that. So you could just be a short-term trader and say, I get in these trades for 6 pips, I do it over and over, and I know exactly what it can produce for me every week. And I think that's a fantastic thing to do. You could hold off a little bit longer and have a MACD line go back above or below the 0 line as your exit. Some of those are going to produce a much larger profit. Some of those are going to produce a break even, and some could produce a loss. And if we're going to do that, we're going to need to use a stop loss, something that is not catastrophic, like minus 15 pips or something like that. And then the third way is just simply to determine that the market has entered into trending type activity, and you want to ride that trend out for the first 3 hours of the trading session and just close your trade no matter where it ends in 3 hours. and just close it on the clock. And that's actually a really fun way to trade as well. I'm a big believer in moving your stop to break even on those scenarios, so there's no reason to let it go into a loss. So here we're going to quickly go through a couple of examples. And let's see, this is a Euro-dollar 5-minute chart, and you can see where price was just sort of ranging, going sideways until the market opened, until the trading session opened. When I say opened, I just mean it's 8 o'clock in the morning in New York, and that's when the U.S. session sort of picks up and the volatility goes on for about 3 hours. So at 8 a.m. it's pretty obvious that the market entered into some trending looking activity. So we get our trade entry where I highlighted the MACD line going down below the 0 level, and you could have taken any one of those exit strategies. You could have taken your profit really quickly and been done for the day. You got your 5 pips, and that was that, and on to other trades or other strategies, or to the beach or whatever you do. At 11 a.m. the trade would have produced 20 pips, and if you had left this particular trade open until the MACD line crossed back up over 0, it was 45 pips. You can go to the next slide.
Great.
Here's another example of taking 5 pips over and over from the London session through the New York session. And each one of these trades produced 5 pips with very little or relatively little or no drawdown whatsoever. So it's not like a whole load of trades, but when it's really regular every day on the trading sessions that you trade, don't shake your head or turn your nose up to 5 pips, because I made a whole lot of money trading 5 pips at a time. Go to the next the next slide. So just to review again, 8 o'clock in the morning is, quote unquote, the open of the trading session for me, for the session I chose to trade here. And the next thing I look for is I look for the MACD line to cross the 0 level, enters me into a trade, and at 11 a.m. I had 30 pips on this trade. Go to the next slide. And if they don't all work out well, and sometimes they don't set up any at all. It's not normal, but on occasion you don't get a single trade, or the trades that set up just don't work. So in this instance, the first trade opens, and then the next candle, the MACD crosses back. So let's see. Okay, so what happens is we had to we had an opportunity to close this one at break even and turn around and sell it. So the first thing we did was buy when price went up through the 0 level. Then within 4 candles it went right back down, so we closed that one and entered a sell. From that sell we could have taken a 5 or 6 pip profit target, or we could have waited for the 11 a.m. And at 11 a.m. on this chart, we're right back where we started at break even. So, it's a little bit difficult, and in this instance, you would have been better off just taking your 6 pips and walking away from it. So I don't want to leave you with the impression that waiting until 11 a.m. always turns out. The market's not always trending. So when the market is ranging, sometimes we'll get 6 pips, 6 pips, 6 pips. Sometimes we'll get 6 or 7 of them in a single trading session. So sometimes what happens is that we get that cross right before the time frame that designates my market open. So the MACD line crossed from below the 0 line to above into the positive histogram bars. But it happened before my trading session started, and so what do? Do you miss the trade altogether? And in this instance, we have the benefit of being able to see that it ended up being a trending market session, and it would have been terrible to miss out on that. And my answer is no, I don't like to miss it. So go to the next slide. And of course, we can employ all sorts of other tools and tricks that we already know for finding another entry. And in this instance, I just used a support resistance line that I drew over the candles that were going sideways for such a long time. And as soon as I got a move over that line, I entered my buy trade. And then you could manage the trade in exactly the same way that we've already discussed. Take your quick profits or hang on for something taller. Okay, here is kind of a complicated looking chart, but I wanted to show you how many trades you can get. The first one is a sell trade, and within 35 minutes it produced 6 pips. The next one is a buy trade, and it produced 6 pips within 30 minutes, and it had a drawdown of 8 pips. The first one had no drawdown at all. So that was 6 pips followed by 6 pips. The third one is a sell trade, and it produced 6 pips in 10 minutes, had a drawdown of -8. The next one was a loss for 8 pips, and we lost it in 10 minutes. We turned right around and got another entry, which we took, and got another 6 pips within 5 minutes. So this particular 6 pip profit target session ended profitably with 16 pips, but certainly it could have ended with more pips if you had employed other strategies to hold it longer if you're the type that likes to do that. I'm the type that likes to close, 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 and take what's there, especially when I'm working from some of these shorter term charts. I guess I don't have to keep saying that. So I wanted to just bump it up a little bit. This is a 4-hour chart, and this is a dollar-yen chart. Rob, I got a dollar-yen chart just for you. I know how much you love this pair. So we enter a sell trade when the MACD crosses over the 0 line, just like before. Let's see, what did I do on this one?
You entered a sell trade when the MACD crossed below 0, and then you would exit either with a 30 pip loss or when the trigger lines go the opposite direction. So you can see on the right-hand side of the chart, after the first yellow area, you can see the MACD trigger lines crossing.
Right. Okay, so this is a technique that we haven't covered yet, and it's just a sneak preview of a trigger finger exit. The exit happens, and it's especially nice on the longer term charts, but really on any time frame, when the MACD line crosses over its signal line. That's when the signal line comes into play. So in this particular example, I had a 30 pip stop loss. That's what it was, and it's going to be more clear when we get to the next chart. I entered a sell trade with a 30 pip stop loss, and I wanted to exit the trade either when it stopped out at 30 pip, minus 30 pips, or when my trigger lines crossed, and the trigger lines crossing gave us 100 pips exiting this, signaling the exit. And so go to the next chart, and I'll show you how this gets a bit hairy looking when you put them all together. So here's our dollar-yen 4-hour hopper with a trigger finger close. So number one, we have a buy, and we lose it immediately. First trade right out the gate is minus 30 pip loss. So we enter when the MACD line comes up through the 0, and it doesn't continue at all. It turns right around and falls immediately and stops us out at minus 30. Not too long after that, the MACD line falls back below the 0 level, triggering us to, or signaling us to go ahead and enter a sell. And this particular sell turned out, this is the one that turned out 100 pips by the time the MACD line crossed its signal line, and there was no drawdown whatsoever on this trade, although we would have started with an initial stop loss of minus 30. Then the next trade, number 3, is when the MACD line crosses to go back up through the 0 line, and that signals us to get into a buy position. Looks like we did have a little bit of drawdown, but not 30 pips, and we end with 50 pips on that trade. And then the fourth one is profitable for 55 pips when we enter into a sell and the MACD crosses from above the 0 level to below 0 into those negative histogram lines, and once again, it looks like no drawdown whatsoever, and it just shoots right down, and we get as an indication that it's time to get out when the MACD line crosses over its trigger lines. And that's that on the 4-hour chart.
Now, that was pretty much the most expert set of examples of hopper trading I've ever seen in my whole life. Here we go. I'm gonna use 3 minutes here and trade and show you some of the trades that I took with the hopper. London Open, MACD fast line crosses over the 0 line. The horizon line is what I call it. There's 20 pips of movement here on a Euro chart. Next we have where you see the blue arrows, we have a buy trade going up. stop loss below the lows. A lot of people asked about stop losses. Jennifer showed you a short-term trade with an 8 or a 10 pip stop loss, or on a 4-hour chart a 30 pip stop loss. On a 5-minute chart, I've tested using a stop loss of just below the highs or the lows or whatnot, and holding on for 20 pips on that 5-minute chart. You can see there that it produces backwards and forwards movement a couple, but I don't close the trade, I just keep it open. I'm already long, so do I have to switch directions? And the answer for me was, personally, no, I don't have to switch directions. If I have my stop loss and it hasn't been hit yet, I can ride this thing out. 20 pips of room again on a euro-dollar 5-minute chart. I just looked at consecutive examples here. Sometimes in a session there's no crossovers. There's no crossover be over the MACD horizon line. Sad face, no trading. That smug guy from earlier, he'd be hurting people by now. Anyway, sometimes you don't get a trade. There's other short-term systems that we have to answer that question. In this example, there's a crossover that happens before the session starts. We could draw a resistance level over the top of the candles, buy it when we break above that resistance level, and then ride it for 20 pips of room. The variety of places you could execute that trade. Here's a sell trade that happens at the beginning of a session, and unfortunately that one stops out. In this example here, we cross where the blue arrows are. The MACD fast line crosses over the horizon. We sell. Stop loss above the highs, 20 pips of room again. There's tons of examples. We could look at hundreds of these. In fact, we did look at hundreds of these. Over the past few days, to get ready for this webinar, Jennifer's been testing all of 2012. I've been separately testing all of 2012. We trade this during the beginning hours of a market session because that can be more active. There are tricks and strategies and additions. There's things that we do when there's no crossover. There's other methodologies. And tonight we want to invite you, if you're so inclined, to trade the hopper live with us and 4 other short-term, medium-term, and longer-term methodologies that are classic strategies that we've used for a long time in 30 days of live trading, where we open up the charts during all kinds of sessions every single time of the day. Those of you that trade the Asian session are wondering, what the hell am I going to do? There's never anything happening in the Asian session. Well, we have an answer for that. We have a method for that, and a variety of other systems that work at different times of the day that produce literally hundreds of trades per month. If you're interested in coming along for the ride with us, I want to let you know you can apply at 15minuteforex.net/apply. The web address is on the screen right now. This isn't some kind of $2,000 nightmare for you. This isn't even $1,000. It's not even $500. This is a chance for Jennifer and I to share additional strategies with you for the purpose of helping you to trade more consistently at times that you are available to trade and still find hundreds of trades to choose from on a monthly basis. That's the goal. That's the purpose that we're here for. That's why we created these lessons online. That's why we did this webinar tonight. It's why we're here in general. We love talking to traders, and we might as well trade our live account with you, together with you, answer your questions. As we teach and we backtest, we do better in our own personal trading, and we invite you to join us. You can apply to be a part of the first and only and maybe final group of people with whom we do this at 15minuteforex.net/apply. We're going to start some classes for this in November, and then we're going to trade for 30 days live after the classes are complete in all times of the day, all times of the night. You can imagine I'll be the one that stays up in the middle of the night. To remind you, we will email you this presentation because we love you and we're grateful that you're here. I had a great time with you all tonight. We'll send you this presentation. It was really fun to spend this time together with you, Jennifer. I want to show this web address one last time for those of you that are interested. We'll send you a link to this in your email when we send you the presentation. We'll send you a link to download the MACD indicator that shows 2 lines. Jennifer will have to send that to me and drop it in the Dropbox, and I'll put it up on the web. And we'd love to see you. We'd love to trade live with you for 30 days. We'd love to hear from you on Twitter if you enjoy the systems. Thank you, Jennifer, so much for spending time with us. You've been trading for 10 years, and this is really a culmination of a lot of that work that you have spent, all that time you spent trading, and we really appreciate the time.
Well, it's always a pleasure to work with you too, Rob. Thank you.
Yeah. It's a pleasure. I know a lot of you have questions. If you go to the website, you apply here, we can answer additional questions in a variety of ways. We'll give you a private email address for the Hopper and for some other things as well. We'd love to hear from you. Once again, the web address is 15minuteforex.net/apply. The only place to get this link is in your email box following this webinar. We're not going to publish this link to the world. We're not trying to get 1 billion people and make $12 million or anything like that. If you're interested in taking what you've learned tonight a step further to find hundreds of additional trades on a monthly basis and be more consistent in the way that you trade them, then once again, we want to spend some time with you, and that's the address on the screen, 15minuteforex.net/apply. Jennifer, have a wonderful evening, all of you, whether it's morning, evening, or whatever it is, wherever you are. Thanks for being here. Thanks, Jennifer.
Bye.
The organizer has ended the session, and this call will be disconnected. Goodbye.